Have you ever wondered why our coins have these ridges around the edges? Well, the answer actually goes back hundreds of years to a time when coins were made of precious metals like gold and silver, and people would attempt to chip, clip, snip, scratch, and scrape the edges gradually off, use the clippings to melt them down and make new counterfeit coins or sell off the precious metals for profit. They could then go out into the market and still use that original, now diminished coin to make purchases. And as you can imagine, this caused mayhem in the monetary and economic system of places like 16th century England. And so what the Royal Mint did is it milled these jagged edges into the coins. They also inscribed on the side of the British pound in Latin the words for ornament and safeguard. That is to say, to safeguard the edge and therefore the integrity of the coin. Here in Canada, we even have this band around the outside of the loonie, I guess theoretically to protect against the same clipping. The British actually brought in Sir Isaac Newton as the master of the mint to come up with a whole myriad of solutions to prevent this kind of rule breaking. And in fact, it became a very serious offense to mess with British coinage. And Newton was very aggressive in enforcing those rules. Many of that enforcement remains to this day. This is the Canadian Criminal Code, and it has a prohibition, section 455, entitled Clipping and Uttering Clipped Coin. Every person who impairs, diminishes, or lightens a current gold or silver coin with intent that it should pass for a current gold or silver coin is guilty of an offense and is liable to imprisonment for a term not exceeding 14 years. 14 years! In other words, they throw the book at you. But as you heard, worry not. You cannot be prosecuted for clipping a Canadian coin under that section because it only deals with gold and silver coins. And, of course, we don't have gold and silver in our coins anymore. This Canadian quarter is 94% steel, 4% copper, 2% nickel, and 0% gold or silver. So, clip away, my friends. But not so fast. There's another law, and here it is, the Currency Act, which is updated. In other words, our governments, even in the modern era, are keeping up with the times and the debased currency by putting in this prohibition on, quote, melting coins. No person shall, except in accordance with a license granted by the minister, melt down, break up, or use otherwise than as currency any coin that is current and legal tender in Canada. In other words, it is still against the law to clip coins. And there are no exceptions, as you heard in the way I recently read that. Wait a sec, did I read that right? Let me have another look. No person shall, except in accordance with a license granted by the minister. So there is an exception. Of course, the government can clip our coins, but how do they do it? Do they sneak into our houses in the middle of the night with a coin cutter and clip off a piece from the end of your loonie and then make off with it? No, of course not. They're much more sophisticated than that. They reduce the size, or in effect, the value of your coin by simply making more of them. When there's an increase in the supply of anything, the value of it goes down. If there's too many dollars chasing too few goods and services, well, those dollars go down in value and those goods and services go up in price. Is that what's happening now in Canada? Well, look at the numbers. In roughly the last year, the supply of dollars in coins, bills, and accounts has actually gone up by $360 billion. This magical bank controlled by the government is buying the government's debt. That is actually the single biggest source of governmental revenue for the last fiscal year. In fact, the government got more money from the Bank of Canada last year than it got from collecting taxes. So instead of borrowing from real people with real money, the government is simply going to a bank that it controls and getting money created out of thin air. And where is all of this money ending up? Well, Corporations and rich people have $170 billion more in their bank accounts as of November of last year, according to the Financial Post. Now, the easy money has also flooded into stock, bond, and real estate markets, where it has ballooned the price of those assets. So if you're very rich and you own those assets, you just got a lot richer. For example, if you're the proud owner of a $10 million mansion and it goes up 30%, which the market did across Canada, well, you've just made $3 million of unearned money simply by sitting in your rocking chair and enjoying that luxurious mansion of yours. But the flip side is this: the price of goods and services that people have to buy is also getting more expensive. For example, the central bank has 4 measures of inflation. Now, 3 of them already show inflation above the 2% target that the bank sets. The costs of the things that poor people tend to have to spend more of their household budgets on are going up especially fast. For example, food, fuel, and shelter are leading the way in this year's inflation. So how does all this inflation clip your coin? Well, think of it this way. If inflation is, say, 4% this year, then a year from now, this coin, this loonie, will only be worth 96 cents compared to what it's worth right now. And if that inflation repeats itself over and over again, you'll be knocking off 4 cents or clipping them off year after year after year. It's like a recurring tax on the same dollar. Think of it in terms of the actual statistics. Food price inflation means that this dollar would actually buy 5 cents less meat a year from now. In terms of gas, for the year gone by, this loonie buys 32 cents less gas, which means you've clipped off 32 cents on the dollar. In terms of real estate, because of the massive increases in home prices, this dollar's value relative to homes is down 24 cents. Almost a full quarter is clipped right off. And finally, if you want to renovate your existing home, well, you're losing 71 cents of this dollar based on the increase in some lumber prices that has occurred over the last year. That actually is the inflation tax. No one voted for it. No politician approved it or passed it into law. The central bank just snipped and clipped your coin in order to melt down the clippings and give the new coins to the government to spend on initiatives that ultimately, in the end, based on the statistics, demonstrably helped richer people at the expense of the working class. Which raises the question, if you and I are banned from clipping coins, shouldn't the government be as well? Of course. How can that be done? Well, first, the government should start to live within its means and spend only real money. During the Great Global Recession, Prime Minister Harper did not print money to pay his government's bills. In fact, he borrowed real money from real people and then paid it back when their bonds and treasuries came to term. That's what you do. It's kind of like when you have a mortgage. You borrow it and you pay it back. We also balanced the budget quickly. As soon as the crisis was gone, we were able to phase out the deficit and protect the nation's finances rather than permanently funding an ongoing deficit with printed cash that devalues or clips the coins of the working people who earn them. So that's the first thing. Second, instead of creating cash, we should create more of the stuff cash buys, like food, fuel, cars, clothing, technology, and other things that people use. This will allow us to increase our real wealth, the real abundance that makes the lives of ordinary people better off, rather than the artificial abundance of easy money floating around, driving up the cost of everything. And finally, we need to restore the Bank of Canada to its mandate, which is to protect the soundness of our money, to keep inflation below 2%, not to fund the ongoing irresponsible, out-of-control spending appetites of politicians. And so we, the commoners, the common people, need to fight for that kind of responsibility, to fight for the soundness of our dollar, because that just makes sense.